Welcome. We're very excited today to have Jeremy Allaire, CEO and co-founder of Circle, join us for the session. I think there's been a lot going on from a macro level within, the global financial landscape, and Jeremy has a ton to share in terms of his views on what Circle is doing in this space and how stablecoins can really drive what we'd say is a significant new level into this financial marketplace. So what I'd like to do is really introduce Jeremy, give him a chance to briefly share a bit of an overview about Circle and what was his inspiration to start Circle.
Yeah, thanks, Stephen. We're actually celebrating our 10th anniversary this year. And, we founded the company back in 2013. And had, prior to Circle, spent the past prior 2 decades building internet infrastructure, internet software infrastructure for the platforms that made, web development possible, web applications possible, communications and video on the internet, a lot of other areas. And but had always been interested in, sort of the international macro kind of political and economic systems. And after the financial crisis in 2008, 2009, I became really obsessed with the more fundamental nature of the international monetary system, central banking, the nature and history of money, fractional reserve banking, like what had taken place. And in 2012, it kind of all came together when I first started learning about crypto. And the idea that we had when forming the company 10 years ago was really rooted in this idea that you could build a protocol that was like other web and internet protocols, but for dollars on the internet. That you could take what we think of as quote unquote real world money, which is best expressed as sort of government obligation money, and that you could express that in a digital currency form. And you could operate it over public internet protocols, the same way that we have public internet protocols for data and information and communications and all these things. And that eventually a protocol like that would be possible. And back in 10, 11 years ago, the idea of smart contracts was, there were some papers people had written, there was excitement about the idea of kind of programmable money, right. This idea that you could actually write in code economic arrangements that could run on these public networks. That got us really excited. So our view 10 years ago was that it would become possible to build like a protocol for dollars on the internet, and that you would then have a programmability layer for economic contracts that could take advantage of that. And that had the potential over a 10 or 20 year period to really transform the way that not just the financial system worked, but actually the way that economic activity was coordinated in the world. And right. That's what animated the vision and got us started. And it's obviously, it was 5 years until we could launch USDC. That was that dollar protocol. And now we're 10 years in. And it's finally, I think, getting to a point where this has the potential to really be a significant, part of the mainstream financial system.
Right. I mean, I think, this idea of this programmable money, right, and let's say the technological advancements that we've seen in this space, from broader smart contract development and et cetera, has obviously led to a significant number of opportunities, but also challenges. I think from your perspective, what are some of the current opportunities that exist? And in addition, some of the challenges for stablecoins and their broader adoption as we see them within the financial ecosystem?
Yeah. I mean, we think of it through a few lenses. I think the first is that, a lot of the technology experience and the user experience for using a form of digital currency like a stablecoin is still just far too complex and cumbersome to be used by everyday persons and businesses. The crypto is still too much in the foreground. The hurdles and complexity and risks that people have to understand and take are very, very high, whether you're an individual or an institution. And so we really have to solve some fundamental issues in not just scalability. I think we're getting further along in terms of scalability, But in terms of the very basics of how you hold, transact, and how you can feel comfortable doing that safely.
Right.
So that's a major both impediment, but it's also a major opportunity space. And so there's, in our view, really significant and exciting new standards emerging around smart accounts on blockchains that I think introduce usability around this. That's really important to eliminate the need for people to know about gas fees or needing to even own a crypto commodity token. It doesn't make sense for anyone to really need to know how to do that. So really the crypto and the blockchain, it needs to become more invisible for this to become more useful. The other big, I think both challenge and opportunity is, these are novel new forms of electronic money. Right. And, there's obviously a lot of different approaches to quote unquote stablecoins, but very specifically a payment stablecoin, which is really the term of art that people use, which is it's a payment token that is fully backed on a full reserve basis by fiat money and by government obligation money. We need to have legal certainty around that, and we need to have clear regulation around the issuance and operations of these payment systems innovations. And so until we have very clear national laws in all of the major financial market centers in the world, we're not going to see this taken up as a core part of the way commerce works, the way corporations function, the way that the financial institutions interact with this. It will remain relegated to kind of niches within crypto trading markets or more limited other applications. So we really have to get that done because there's obviously very clearly significant challenges with the way some of these products have been built and continue to operate. And if we want the assurance and safety and trust for the mainstream to depend on it, we need regulation really clearly, and we need that pretty quickly.
Yeah, I mean, I think you hit the nail on the head in terms of building trust within the ecosystem. I mean, as you know, over the last year, we've seen what would say some very difficult moments within the digital asset space. How has that affected what you guys have structured at Circle? Have there been changes to the structure of USDC's reserves since things like SVB and the banking crisis began? And what measures have you really taken to protect USDC holders moving forward?
Yeah, so this has been a constant evolution. When we started 5 years ago, we held ourselves out as regulated under electronic money laws in the United States, transparent with monthly attestations, and audited by public accounting firms and attested to on a regular basis. And that was critical, and that was a key part of making sure that there's good fiat infrastructure, interoperability with the banking system, and kind of quality there. We've constantly been what we call a race to the top, trying to increase the quality of that market infrastructure that sits behind USDC, the banking infrastructure that sits behind USDC, and the transparency. So last year, we made tremendous progress. We quietly and then more publicly, we upgraded key pieces of USDC's infrastructure. Most notably through a partnership that we built with BlackRock. Mm-hmm. And through that partnership, we launched what's called the Circle Reserve Fund. That's a fund issued by BlackRock. And that holds approximately 80% of the reserves of USDC. And that is a SEC registered, SEC regulated and supervised government money fund structure that is for the sole use of USDC reserves for the benefit of USDC holders. And it provides that additional layer of independence, supervision, and audit. And it also provides daily transparency. And so unlike any other stablecoin in the world, you can go to the ticker, just do a search in Google or whatever search engine for USDXX, and you can pull it up and you can see on a daily basis exactly what is in that reserve. So that was a key infrastructure. And that also led us to build partnerships with firms like Bank of New York Mellon, which is, I think, one of the largest, if not the largest, custodians in the world that's custodying those reserve assets. And that's like taking some of the most fundamental market infrastructure providers that are really at the core of how our financial system operates more broadly and building that into the infrastructure of USDC. So those are steps that we had already been taking, and I think provide a level of rigor, compliance, and transparency that is unmatched still today. We've always been concerned about exposure to the fractional reserve banking system. Philosophically, we believe in full reserve money. We believe that a digital dollar that is issued and can work on the public internet as like a cash equivalent instrument needs to be as safe as possible. And so we've always sought, and we've been pushing for mechanisms that would allow us to reduce reliance on commercial banking. And that really obviously kind of blew up for not just Circle, but for the entire banking sector. And it's found its way into failures of banks as large as Credit Suisse in Europe. And what we've seen is, interestingly, is we've had to protect ourselves from inherent risks in the fractional reserve banking system. Right. And so post SVB, we've improved our infrastructure in a number of ways. One is that we are holding cash at the highest quality global systemically important banks, which is important in terms of that kind of underlying. If we are going to have to face commercial bank risk, trying to continually improve that. And the second is we've diversified that reserve fund structure to include both treasury bills, short-term treasury bills, but also tri-party treasury collateralized reverse repo facilities as well, which is, for someone who's a large corporation doing cash management, that's not a big thing. The mechanics of that are really important. And in fact, I've been publicly talking about the fact that we're now protecting USDC from an actual depeg of the actual dollar, which is that if the US government defaults on its debts, the dollar itself will effectively, meaning the short-term treasury markets are dislocated, which would obviously wreak havoc. So we've taken measures to protect USDC holders from that. And so Circle today holds no T-bills that mature beyond May 31st, which is the day before the X date. And so we've undertaken rotation. And again, that's all public and transparent. You can see all of that on a daily basis. And so those are some of the things that we've done. And I'm quite confident to say that today, USDC is by far on the best market infrastructure in the world as a digital dollar. It is the safest digital dollar. It's the most transparent digital dollar. And everyone can have confidence in that because of the steps that we continue to take.
I mean, obviously, that's a comprehensive set of, let's say, action steps to really ensure, I think the broader confidence of the market around USDC. I was going to get towards this at the end, but I think you brought it up, right? We've obviously seen new pressures facing the dollar, right? And what are some of the ways, or what are some responsible ways that private sector innovation maybe can help keep the dollar competitive, I think, in this new era of global competition and maybe structural questioning of financial markets as a whole?
Yeah, I mean, this is a major theme, and you kind of can't pick up the newspaper, quote unquote, without stories about de-dollarization. We have we've had issues around weaponization. We've seen geoeconomic blocks that are forming, that are trying to build alternative payment systems. And so this is more real than it has been in the past. You've seen a decline in dollar reserves in central banks in favor of things like gold in many cases. And so the structure of the fiat reserve system and the international monetary system is definitely undergoing changes. Now, how quickly are those changes going to take place is an interesting question. But right now, for the United States, obviously, the role of the dollar is really critical as a form of both soft power, in some ways hard power, and it undergirds the global financial system. And so it's extremely important for the United States that the dollar remain a preeminent currency. And I don't think anyone's questioning that the dollar is going to remain the preeminent reserve currency for a long period of time, but there is a real shift. And so the sort of framing that I like to use is that the competition for currency in the future is going to be a technological competition, just like in many other areas. These are technological competitions, and the United States has an opportunity to decide how it's going to compete in that technological competition. Historically, if you use the internet as itself as a kind of early reference example, it was by creating open, fair, competitive markets, having clear regulatory frameworks, and letting the private sector drive innovation. That led to the United States playing an outsized role with technology companies that have delivered extraordinary innovation through software on the internet. And I think the same thing is going to hold true in this realm of technology competition around currencies. And so really what that means is the United States needs to have clear policies that establish a framework for the issuance of digital dollars through private sector innovators, bank and non-bank, with clear rules and clear, freedom to innovate and compete. And that's really going to be in contrast to models that are, centrally controlled and operated by governments that may have other objectives, surveillance objectives or other things. And I think then you have a real competition on the public internet, and individuals and households and firms and economies will be able to choose which are the best, both from a safety perspective, and which are the best in terms of a privacy perspective, what are the in terms of technological capabilities. And so we really need to see things like that. And I think that creates the basis for more dollar competitiveness over the coming decades. And this is obviously a multi-decade phenomenon.
I mean, that's extremely helpful. I think I'd like to step into the realm of regulation, right? Because I think a regulator's job is obviously difficult, right? There's this balance of innovation, as you're saying, and then there's the balance of keeping consumers and an ecosystem afloat and operating functionally. I think, in your view, what's a reasonable level of regulation, control, and compliance for stablecoins issuers, really without hindering, let's say, innovation and adoption in the sector, right? There's this balance that they have to play, and where's that kind of reasonable line, and what does that look like moving forward?
Well, I think the consensus view that seems to be emerging around the world, and is that first of all is that stablecoins are a form of both payment system and electronic money, and that these should be regulated by prudential regulators, by banking and payments regulators. And now there may be designs on stablecoins that would really have them classified as derivatives, as securities and other things, but that's distinct. So I think fundamentally these kind of payment tokens that can be used broadly, prudential supervision is first and foremost. And there really, there's a lot of work that's going on from a regulatory perspective, coordinated amongst many of the most important economic blocks and governments in the world, and really coming up with a framework that regulates essentially issuers of stablecoins being held to standards that are bank-like in nature, right. Meaning really robust enterprise risk management, really robust control functions, safety and soundness of the way they operate infrastructure. Obviously, things that we all take for granted in the digital asset ecosystem, such as redemption rights, a very narrow, safe base of reserves that are allowed, so that these can be these safe cash equivalent instruments. Levels of attestations and audits. So a high degree of rigor there. But I think that the challenge that exists for regulators is the fundamental novelty of this innovation is that these digital currencies exist on the public internet. They're not in the kind of traditional, kind of tightly controlled, closed-looped private infrastructures that have defined most bank-based payment systems, but it exists based on open source software, on open source blockchains, on public decentralized infrastructure in many cases, and that's a novelty that's also very challenging. And so I think the trick here, it's not a trick, but the challenge here for regulators and for the industry is how to provide kind of the level of assurance that's needed for society as a whole to depend on this public internet infrastructure, and in particular public blockchains. And that's a new thing, and it's a new thing that regulators are having to grapple with, just like the media industry and the communications industry had to grapple with moving from their closed network infrastructures to public internet protocols. So I think that's one of the biggest areas, and I think there's broader issues around financial integrity, identity, financial crimes, that are major issues that I think some people in the industry would hope just go away. I think a more realistic view is that we have to solve for these. If we don't solve for these issues, broad-based adoption by society and corporations and financial institutions is just not going to happen. And so those are critical issues that are both technological, industry, and require, I think, really robust, private and public sector collaboration.
I guess when you think about that broader collaborative piece, do you think there needs to be a unifying basis across regulators across the globe, right? Are CBDCs going to act as kind of this unifying basis in which kind of money is looked at in a similar way, and money, let's say, on a digital ledger is looked at in a similar way? Or do you think that really there's just a high-level set of frameworks that need to be put in place, similar to things like what we see in FATF, right? That then, kind of underpin the way that operators of stablecoins might look to engage in the space?
Well, I think it's happening. I mean, if people are looking closely, right? The G20 and the Financial Stability Board made a very specific set of here are policy recommendations for how G20 members should regulate stablecoins. Right. And now G20 members are going through the process, through their legislatures, through their issuing of guidance and new rulemaking, are getting a relatively normalized set of rules in place. They're not all identical, but I think they're going to be more and more normalized, and that's what you hope for. That's what you hope to see. And there is going to continue to need to be very significant collaboration at a global level. Across major markets and regulators, so that this is consistently treated around the world. And so if you're in the financial sector, or you're a corporation or others, you're going to know exactly what this is, how these are treated, how I can use these, no matter where you are in the world.
No, it makes perfect sense. I think we talked about technology in the basis of you starting Circle, right? And this idea of programmable money. I think the question is really, looking at a forward-looking basis, right? From your perspective, are there really any emerging technologies or, let's say, innovative solutions that Circle has implemented or will implement to really enhance the resiliency of USDC? Obviously, there's the regulatory part of it, but there's also the technological. And how will you really address, let's say, a multi-chain world that potentially Circle envisions?
Yeah. So there's a lot of innovation happening in public chain infrastructure in both layer ones and layer twos. It's a very dynamic, competitive market, both for scaling, for user experience, for security, and other features. And so we've made a major commitment to making sure that the USDC protocol is natively available on as many meaningful chains as possible. I think we're on 10 chains now. We've announced another 5 that we're launching on. And that's really important. But once you're in a multi-chain world, which we think we inevitably are, there are going to be lots of applications that are optimized for different platforms, whether it's a game on Polygon, a core financial protocol on Ethereum, a trading infrastructure on Arbitrum, or wherever that might be. There is this multi-chain world. And there's been a huge amount of complexity and risk that's been introduced through things like bridges. And that's a really big problem. The most bridged asset in the entire blockchain ecosystem is USDC. It is by far the most bridged asset. And that's a problem, because what that means is that you're locking up USDC, you're putting it at risk as a honeypot in these bridges, you're introducing capital inefficiency, incremental costs. So you've got costs, security, and user experience hurdles that are really significant. So just as an example to your question, we launched something recently called the cross-chain transfer protocol, which actually provides a native-to-native burn and mint model so that USDC can teleport between chains. So you could have USDC on Ethereum, you can teleport it directly to USDC on, say, Avalanche, which is up and running today. And it literally will burn the USDC on Ethereum, and it will enable a minting of the USDC on Avalanche. There's no bridge, there's no locked assets, there's no security risk, there's no incremental cost. And it allows you to build user experiences where people don't have to worry about what chain they're using. Right. They can just move and transact and interact across these infrastructures. And that's part of what I was talking about earlier. How do we move this into the background so that people aren't having to think about these things? It takes, a college degree, so to speak, to get up and running with all the infrastructure to use this. That's just not going to work if we want to make this a at scale infrastructure for everyday payments and finance.
No, that makes perfect sense. I think someone told me the idea of really operating in this space is the idea that people don't really know that they're utilizing this technology as a basis of their everyday lives.
Yeah.
I think we're getting towards the end of this session, and really, my last question is really around what's your future roadmap at Circle? Given everything we've talked about from a regulatory perspective to a technological one, how are you guys looking to position yourselves in your future roadmap? Will we see Circle as a fully reserved digital bank in the future? What does that look like for you?
Well, it's a great question, and we won't be able to answer that in all the detail I'd like, but there are a couple of things I'd say. The first is that we are continuing to be committed to holding ourselves to the highest standards that are necessary, and I think we aspire to be what we call a full reserve digital currency bank. Whatever we end up being called, we want to be we want to be able to operate at a very high standard. But we don't want to be a lending institution. We really want to build this kind of payment system infrastructure, digital currency issuance model, and are hopeful that we'll see a path to do that. Now, in terms of the broader roadmap, we think about it across a few different areas. The first is just the what we think of as just the stablecoin infrastructure, providing the most robust protocols in the world to make dollars and fiat, et cetera, work really well on blockchains. The second is basically driving the availability of USDC in the banking system all around the world, so that people can get access to USDC seamlessly, easily, cost efficiently, and quickly. So that's another piece. And then the last piece is basically providing more and more infrastructure services so that Web2 developers, financial institutions, fintechs, and others that want to embed the kind of wallet infrastructure and kind of protocol infrastructure to be able to utilize something like USDC really easily. We're going to provide more and more of those infrastructure platforms to support, going from the 100 million users that are in this kind of space today to the billions of users that we anticipate that are coming.
That's fantastic, and obviously everyone in the space is looking forward to I think what you guys are doing and really how we'll see innovation in this particular sector. So, Jeremy, just thank you again for your time today. Thank you again for your insight and much appreciated, and thank you to the audience for joining us for this fireside chat today.
Thank you.